I have another monitor here just to verify everything that we're running with YouTube. Just give me a second here and we'll get everything set up. So right now, it's setting up YouTube. We are now on YouTube. Just give me a second here. Okay, so we are now streaming on live too. Hello, everybody. It's Brian here. Say hello, Bob.
Hi, guys. How's everybody doing?
We're doing all right. So let me just get the YouTube working on this other computer because then I can get the chats working. Okay, so I've got a bunch of questions. Now, if you got question, we have Francesco online. How do you want to do this? You want me to just go through these round robin of questions? And
why don't we go through the questions as in order, and then if anybody's got any questions they want to come up with, we'll just deal with those after we answer the ones that were submitted.
Okay, so sounds good. So Francisco, if you have a question as well, I was say Francesco. Sorry, that was Francisco and Francesco. Okay, so the first question is, now I didn't realize you've been around for since the 80s. I've been my very first time I was programming was when I started when I was like 14. So I was starting with a VIC-20.
Oh God.
and I started getting into Apple II back in around the same time.
So that's what our first software was made on an Apple II. Yeah,
that's.
I mean, they're laughable. I mean, I can't even begin to compute how much more powerful my iPhone is than that Apple II was.
I know it's beyond scary. Okay, so let's get started. So you wrote an article, or you wrote an article for Futures Magazine. How far away? You entitled "How Far Away Is a Holy Grail Machine in '85?" How do you foresee the future back then and where we are today?
Well, to be perfectly honest, I don't. Maybe I lack imagination then and now, but I could never have foreseen the extraordinary explosion of computing power. Back then, as you well know, writing a program on an Apple II was like just a major chore because you had nothing to work with. You had no resources. So, but the idea that in truth, in some ways, I think that what has actually come to pass, I don't think anything that's come to pass has surpassed my expectations. As a matter of fact, I think since I always have great expectations, I think they probably have fallen relatively short of my expectations. I really expected the process of robotizing trading to be far further along than it is now, but it's coming. So I think it was interesting because I was right about clearly seeing that, it was going to, because, I don't know if you remember, but back in those days, people didn't really, you had to persuade somebody to believe, you had to make them believe that a trading strategy was called the trading system in those days could actually work. Nobody believed that. It was like pulling teeth to get somebody to actually even consider the possibility that it would actually get those possible. So the fact that, and obviously we had them even back then that were very good, and the world kind of caught up to us. But I don't think that the irony is that the institutions, of course, have made billions upon billions upon billions of dollars with computerized trading strategies, and and a lot of individual traders have managed to kind of tag along. But I don't think that individual traders have really taken anywhere near full advantage of what's available.
Well, what about quantum computing, where it's at? Because I know for Goldman Sachs, they're one of the early believers in quantum computing. And I don't know if you know, but when Red Hat came out, they were one of the first big clients for Red Hat. So, I mean, if you got a pioneer like Goldman Sachs getting into quantum computing, I mean, it has to say something about where things are going, at least on the scale side of.
Well, sure. Well, the guys who, all the people who do, all the institutions that do high-speed trading are always looking for faster. They basically, it's warfare. I mean, they basically live and die off being there first. So yes. Of course they're going to want faster.
Yeah. Okay. Let's do the next question. Like I said, we got Shalom aboard. How many? We got 5. So we're up to 4. It's going to take a while to get a bigger crowd out. The next question is from your article of Gann lines and angles of 1992 outside of software, like including like today's software platforms have the basic principles evolved in the basic concept of GAN lines since that time? And I'll leave the next part of the question.
No, I don't think that in truth, I know we have computerized a number of different kinds of programs that utilize trend lines and pivot points and so forth. But for a lot of people, it's very difficult because we know from having done this for so long that you have to have a systematic approach to determining pivot points in sequence to get this done accurately, or you have to have some way of drawing meaningful trend lines. So I've always thought that, I've always been a fan of support and resistance going back to the very beginning when I first started doing this for guys on the floor. But I don't think the principles have changed. I think the applications haven't really kept up.
Okay. Yeah, totally. Now, for me, like we've talked about the current strategy I've got with the crypto going. I want to ask your opinion on this because this has been one of the critical key points of the strategy I got working now. Do you believe in candle patterns, and do you also believe in harmonic patterns that can be used for early reversal signs? So like a logging process, you can use candles or harmonics.
Well, I think they're two separate things. But again, keep in mind that we built a program years ago that actually runs on measuring chart patterns intelligently. And I say that because you just can't, it's not that easy to simply specify the chart patterns and be accurate, actually have them be what people think they really are. Okay. I think there are certainly, I know there are some candlestick patterns that work because I don't use them as candlestick patterns, but I use them. So, and they work, they work just fine. And I'm also a great believer. I mean, the harmonic stuff is based on Gartley. Gartley was a great guy. He was one of the early pioneers. And I know I'm familiar with it. Some of the patterns that I've computerized actually were, before I knew about Gartley, they were actually some of his patterns. So, because they're kind of, I mean, if you look at patterns, if you're really put your effort into it, they kind of show themselves. So yeah, I think I don't believe in anything. I believe in the facts. I believe in proving it. Right. And I wouldn't just say use them. I'd say find some way to test them and then find out. Because I mean, there's so many candlestick patterns, and I know from other people that they all don't. Some of them work, some of them don't. You get too many patterns. I mean, okay, it gets to be kind of meaningless. But some of them do work very well.
Well, I don't know if you know the site, the patternsite.com has been an excellent reference for that, where he's gone through well over 1,000 patterns, and he's gone through the which are reliable and which ones aren't. He's written a whole book on it. Who's the guy
that did that? What's that? Who's the author of that?
I can't remember his name, but the website's thepatternsite.com.
No, I haven't looked at it. But
no, it's excellent from what I've seen. I've gotten maybe out of that, there's something like over 100 different candle patterns, and I've whittled down to about 12 that are fairly reliable and 1 or 2 that are beyond reliable. So I
believe that, but I think that's what you just can't say you believe in candlestick patterns,
Yeah. But I guess it depends upon the time pattern and what kind of asset class that you're using them on as well. Sure.
So, well, pattern recognition is a very broad term, and there are so many kinds of patterns, and I think it's incredibly fruitful. And anybody who wants to make the effort will be rewarded. But you've got to be very meticulous about it. Let's put it that way.
Yeah. Also, with the article on stop placement affects trading performance at 84, do you believe that today's current, now when I say current, Forex, retail, and other retail brokers are corrupt with what we call stop hunting? Do you believe that's a huge, pervasive? I'm going to say, I already know my answer, but go ahead.
No. I mean, look at it. I don't think anybody should be blaming brokers. I mean, people have been picking off stops for as long as I've been involved with trading. That's right. The whole, and I know that there are hedge funds that really basically make an effort to fade and whatever they can figure out whatever they can fade, including stops. And I know that there are people who are prop traders who work like in the night sessions when the markets are very, very thin, and they look for them because they have nothing else to do. The markets are dead, and yeah, sure they do, but it's not. I wouldn't blame it on the brokers or the Forex guys. I blame the traders do that.
Yeah,
it's been going on for as long as it's it's been going on for as long as there's been trading, and it'll keep on going as long as there are stops. But the simple truth is, I think there's a bigger question here. And this is the question of whether stops actually really work. And, you know, I know I've been very, I don't think you can basically say there's just one kind of stop that's going to work for your strategy, because please trust me, I know that's just not true. You really have to find stops that work for your strategy, and I call them organic stops. You know,
right,
stops natural to your strategy.
I know we're gonna talk about average true range in a little bit,
Okay.
but that's one of the more popular exit methodologies people use. But in terms of clean brokers, I just want to know, I mean, let's put it this way. Interactive Brokers is probably one of the most advanced brokers out there. Is that something you would recommend for newbie traders that are just starting out and want to get into automated trading but don't have access to, like?
I would recommend, I think they're very good. And I recommend sticking with the larger the trading firm, the more reputable they will be, and the more likely you're going to get everything you really want. So the bigger, the better.
Okay, well, I just got 2 comments from people on YouTube. We got, thank you, Brian and Bob. Greetings from Brazil. Thank you for watching. Also, excellent. This is from Art. Made it. Thanks, Brian and Bob. And he says hello.
You're welcome.
All right. So another question. I found this interview in this other question really intriguing, where the interviewer said, this is what he said. He says, there was no trading screens or other market paraphernalia anywhere in sight. If they existed elsewhere in the premises, Robert was not anxious about checking up on them on his trading progress. He had the serenity of one possessed of total faith in his system's ability to hum along just fine without him. This is true.
Yeah. I mean, I put all the effort that I make. If I want to be a discretionary trader and be a slave to a screen, I'll be a discretionary trader. Right. And that's what I'll do. There's no benefit. I've never really been a slave to watching what's going on in the markets, because ultimately I figure the systems will be able to handle it. There are times when you, as a manager, you really have to be responsible. And when things really really hit it, and things are really in a very volatile state, I'm a little bit more attentive, because I'm required to be. But in general, yeah, I don't, I mean, honestly, most of the time I don't really care what's happening in the markets. I just want to know that I'm making money.
Right. Okay. I guess, I don't know, this other question about. Sorry, go ahead.
That gets sound a little bit irresponsible. It's not the job of the technical trader to be evaluating the markets. I mean, in fact, I do, and I do it with a certain level of skill, but I don't really apply it to my strategies, because that's not what's supposed to happen. So that's what I mean by, I don't have anxiety about the strategies working. So I don't have anxieties about performance day to day. Okay.
That's really good. But I was going to ask about things like mobile apps, or like, so you're not like glued to a phone like most traders would be, and worrying about where things are at on a 24-hour basis at all. You're just calm, cool, and collected, and you let the systems do what they do.
Yes. Well, I mean, but I actually have an associate who actually is responsible he's kind of responsible for that stuff, but he's not any more glued to it than actually, because he used to be a prop trader. He is a little bit more of a market junkie than I am. But, right. No, I don't really, I'm not glued to any monitoring of the markets.
Okay.
Just as needed.
Now, the other question is, I primarily read that you're a futures trader. Is that your primary asset class that you focus on today still, or?
For now, yes.
Okay. And have you ever expanded into any other asset classes at all?
Well, we've certainly, I've traded stocks myself, and we'll be expanding it to stocks once we have upgraded our trading, our research capacity, because there's so many of them. We've tested it in stocks. The stuff works pretty well. I personally feel, and this is not really a judgment, but in my experience, it's easier to trade stocks than it is futures. So I look forward to it. I have a friend, a longtime friend, who he trades for himself for his living, and he shifted his stocks about 15 years ago, and I said, why'd you do that? He says, it's so much easier.
Okay.
And I quote,
So, do you see, like, with where the markets are because of the huge dip that we've taken in the last couple of months, do you see any new growth areas that you don't see that still has a lot of potential for 2019 and going into 2020 at all outside of?
Well, who's writing off 2019 already? It just started.
Yeah. You're supposed to have a 1-year guidance in your outlook, remember?
So who knows what's going to happen? I think all kinds of interesting things are going to happen. We have let's be nice about it and say we have an extremely volatile president, and he certainly provides a lot. He provides some activity in the markets.
Yeah.
We have a growing global economy. All the foreign markets right now. The European markets are quite mature at this point in time, but all these Asian markets are very immature. And China's newly rich and got billions of dollars, and they really love to trade almost like gambling. So there's going to be a lot of opportunity. And truthfully, I don't see, as long as the world economic system remains more or less intact as it is, and hopefully get some improvements. But as long as it remains intact, we're going to continue to have emerging markets for years to come. And it certainly, I think that there are a lot of extra risks that go along with that. But I think if you're really looking for inefficiencies there in crypto, you're going to have opportunities in crypto, as you well know, for years to come. They're very inefficient markets, and the arbs that I hear are actually, as you know, they're off the charts. So I think there's going to be lots of opportunity. But you have to pick your opportunities carefully. It's got to suit you.
Okay.
It's got to work for you.
Now, just specifically to commodities, do you think there's going to be a rebound in the markets coming up, namely big oil? That will be the big trade for 2019.
Well, I honestly don't look at the markets that kind of way.
Okay.
I know that we're making money in the energy markets now, and they've been really they've been difficult. So I'm glad for that. I think that these days of, in our program, XT99, we made buckets full of money in oil in 8 and 9 when they had those gigantic swings. Right. I don't really know that I don't really expect to have those kinds of swings in the oil markets of that magnitude. Swings, yeah, but that magnitude, I don't think so. And frankly, I think that oil's essentially, I wouldn't declare it dead, but I think within 10 to 15 years, the significance of oil is going to be, people are going to look back and say, was that true? Because I think it's pretty much it's an obsolete method of energy production. Yeah, it's time for it to come to an end. So but there's opportunities. I think as long as you have a growing, you have India and China growing richer every day, and then we have the nations behind them that are growing richer. You're going to have expanding markets for years to come, and it's putting extraordinary demand on all the ag markets and all the food markets and all the metals markets and so forth. And I don't see that changing.
Right. Now, one question I thought was, how come you're not trading options at all? Or are you? Or
no, we don't trade options, and I just don't. I mean, the data is a mess from my point of view. That's why we don't trade them. There's just the data is very, very expensive, and I've never really. I mean, there are certain things in options that I kind of wish we did trade options for because there are good opportunities. But the people I'm getting involved with, I mean, it's interesting because they're market makers. And they really don't. They may use options a little bit for hedging and so forth, but they really don't. So I don't know. I don't really know how electronic the options markets are. I'm actually pretty ignorant of them, which is one reason why I don't do much more with them.
Well, I have the technical capabilities right now. It's just a matter of paying for the actual, as you said, the data providers. We can talk offline about that if you're ever interested. The other thing is. You said in the S&P is so volatile and dynamic in its own right way and swings such, though, that works that may not work in other markets. Now, this is the question, because I'm always on Bloomberg and hearing where they said, computer algos kicked in, a certain trigger brings down the markets. And as a result, do you think because let's say the computers have taken over the markets, do you think that 2019 is going to be an extra wild, jittery year because of that?
Not because of the computers, but I think it's going to be wild and jittery because of the politics to some extent. Let's face it, the markets. The only thing people like to think the markets have changed, and they really haven't. The only thing, markets always change. That's a simple truth. And they've gotten far more liquid because of electronic trading and because of all the of globalization. So you have all that going on. So I think we're going to have, and whenever you have, whenever you have political, and look at a bull market in the stock market, it's boring. It's really hard to make a living. If you want to be a day trader in a bull market, it's going to be, it's a little bit, it's not at all, it's pretty quiet. The volatility always happens in bear markets, and it's not clear to me yet. I'm not exactly sure. I really don't know exactly where we're at right now, but I don't know that we're actually going to be going, another 500 points or 1,000 points lower in the stock market. But I think we're going to be we may be kind of like in a long-term trading range. Although the simple truth is, I mean, as long as the global situation is what it is, and money keeps on, people are chasing yields. You can't make any money in fixed income. So for all the people who basically are trying to make a living passively, you can't do it. So that's a lot of money is being pushed into the stock market just because of that situation. So there's a lot of things that will lend it some support. Whether we'll be seeing new all-time highs anytime soon, it's an open question.
Okay. Well, I'm going to skip one question for now, but it's going to go back to, do you think emerging market equities will be the place of opportunity for 2019, namely in Asia, like they were in 2014-15?
I think emerging markets will provide opportunity always, by definition. And I don't know they're going to actually be better than the U.S. stock market. I mean, let's face it. If you can't, there's enough movement in these futures markets and these stock markets. If you can't make a living at it, you probably got to think about making a living and doing something else. They move.
Yeah,
that's what you need.
Now, this is a question that has come up a lot among a lot of professional traders, and I'm not sure if you're I mean, I know you're a CTA, but one of the big constraints that you may have, I just wanted to confirm if you do or don't have this. Would you say you're strongly constrained by industry accreditation, like a CFA would be? So what I'm saying there is, like, you're only restricted to having certain portfolio sizing for particular market sectors or asset classes. Do you have those kind of constraints in your field?
No. I mean, we're constrained by practical concerns, and that's most people nowadays don't really want a margin equity ratio exceeding 15 to 20%. So that's a constraint. But as long as you're within that, as long as you're within that and making money, people, that's really those are our constraints. We have to perform.
Okay.
Unlike a lot of hedge funds.
Yeah. If anybody's got a question, chime in. Just type it up in the chat. We're open to hear any question you might have for Bob. Thanks again for being part of this, Bob.
Sure.
Really
it's fun.
Let's get into some questions that hopefully you're more your specialty is. This is more about portfolio optimizing. If you have a particular position that is going range bound or flat, would you tend to cut it right away as opposed to reallocating it to a higher performing asset?
Again, there's two questions in there. We don't override our systems. We do change the mix of strategies, and we change the mix of strategies based upon proprietary algorithms and based really upon performance. And the reality of it is that if you have a strategy, if the market's moving and your strategy is not making money, probably there's probably something wrong with that. So you have to be concerned with that. But no, we don't just arbitrarily shut a strategy down because we think the market went flat, because who knows? who knows how long it's going to remain flat?
Right. The thing is, I mean, one of the that one interview I mentioned earlier, you mentioned that the only human intervention you do is when you recalibrate your portfolio. And if you do it, what does that recalibration depend on, and how often are you doing it?
Well, those are both proprietary questions, so I
understand. Whatever you can.
But we do it, and we do it based upon an evaluation of the strategy and performance of the markets. And we do it. It's the kind of thing you really ought to, instead of simply saying arbitrarily, let's do it every 3 months or every 2 weeks, you should test it.
So are you setting certain targets for the performance of that particular set of strategies? And then that's when you may kind of go in and if you know
it's more like we don't know. We're more concerned with who's the best. That's
okay. So it's all about optimal performance, I'm going to say.
Right.
Okay. Back to portfolio optimization or portfolio theoretical techniques. Do you believe in anything like Markowitz?
Well, I'm not super familiar with it, but in general, I think it's as dangerous to optimize a portfolio as it is to carelessly optimize a strategy.
Well, how about this? When you're about to put on I'm sure you do a trade plan each day, but when you're about to go in and do a set of trades, are you somehow balancing those position sizing, and like what sort of optimization techniques are you using to reallocate?
Right. We have algorithms that actually we have algorithms that basically size for everything. And we don't really go through any rebalancing of that. Our sizing algorithms are such that it keeps things generally in balance. And
okay.
If something really goes nuts, we do have portfolio level stops that will take a strategy out if it really goes, as my associate says, if it goes off the rails, it just shuts it down.
Okay. Yeah. That's what I was going to get into the next question. I'm not sure how much you can divulge with this, but do you believe in throttling down your account to if you have poor performance at some point within a particular strategy, like meaning Kelly criterion?
Well, we have our method. We have the methods. We have our own methods for determining whether or not a strategy is performing the way we like it to perform. So that's the first thing. And we don't really, I don't know. We don't really throttle down on this stuff just because, if it really goes off the rails, it's out. But we don't go through every day and do that. But I know that there are some people, and I think it's something we're considering exploring, whereby there's a process called for portfolio volatility balancing, which I think is actually an interesting idea. And I know that you know who Monroe Trout is. He was kind of like a legendary CTA who made lots of money and then retired about 25 years ago. But basically, one of their strategies was basically if they lost more than X% a month, they simply shut down trading, which I personally I think that's a little bit extreme,
right?
But because it depends on how complex your trading really is. But I think the idea basically, I know I've tested that idea on a strategy level, and it's actually a fairly good idea. But as my friend Barry Kaupman says, it's easy to kind of cut things down. It's a lot harder to know how to get back into it again.
Okay. Last part of this question is, do you set any form of daily target moves, meaning a certain percentage? A lot of professionals will say they want to have a 1% move on their portfolio for that trading session. And each time that you put capital at risk, is it the same amount each day, or is it changing each day based upon, again, performance?
Well, again, we just go back to the sizing techniques we have. We don't really look. I've never set like a optimal target for performance in the course of a day. That's an interesting idea. I've never done it. I don't know whether it's a good idea or not. I don't know how you could say anybody'd like to make a percent a day. Who wouldn't? That's great if you can do it. But no, we don't set those kind of targets. Seem kind of arbitrary to me. I'm more concerned with profit targets that make sense in terms of that are more dynamic.
So are we talking about hard set dollar amount of profit, or are we talking percent move?
Neither.
Yeah, okay, we'll leave it at that. We got some questions. Art had a question. He's a new guy, and this guy's driven to be successful, I gotta say. When you were learning trading, what do you think the big aha moment was when you finally made it, when you became profitable? If that makes sense. Like, what was the big?
I'm just trying to think if I had a big aha moment. I think that in all honesty, I think my biggest aha moment, I've had a lot of aha moments in the course of my career. And when I first started doing technical analysis software, I just loved it. I mean, I was just amazed at how effective a lot of these different methods were. So there were a lot of incremental aha moments. But perhaps the biggest aha moment in trading was when I realized how effective walk-forward analysis was. And when I realized I could use walk-forward analysis to actually make all kinds of strategies and have confidence they would actually work. That was a big aha moment for me.
Well, what about back testing? Because a lot of people use it, and then I've talked to a lot of pros and they don't use it. I mean, what's your approach on?
Well, my feeling is if anybody doesn't back test their strategies before they start trading it, they're either they're omniscient or they're fools. I don't think anybody. I would never trade a strategy. I've said it more than once. I would never trade a strategy which I haven't thoroughly tested first, ever.
Okay. We got a couple of questions here from M. Aus. Is genetic algorithm, is it okay to use real numbers instead of binary numbers? Does that make sense?
No.
You want to try that again, M. Aus? And what is the best software you could recommend for optimization?
Well, I honestly, what kind of optimization? I mean, we use, the software that's out there commercially, none of it really is exactly what it is that I want. But we use different pieces for different things. We use Trader Studio because it's incredibly robust and automatable for large scale testing like we do. We use TradeStation for prototyping. And sometimes we do it for testing, but I think anything, there are new pieces, and I can tell you there's a piece of free software called QuantStrat, which is unbelievably powerful, but it also has an unbelievably difficult learning curve. So, and that will do everything you could possibly imagine, probably plus a lot of things you probably didn't imagine. So it kind of depends on how deep down the rabbit hole you want to go.
Okay. A couple of comments from Vincius asked, now this is Expert Advisors Studio is online and MetaTrader. I think he's referring to optimization, has walk forward too for anyone out there who's interested in that. Now, two questions for Shalom. First is, what is the foundation of your trading theory based on? I think you've probably gone through a number of shifts throughout the years.
Well, I mean, I don't know how to put it. I mean, it's just there are a million roads to Mecca. There are thousands of ways to make money trading. Mm-hmm. There are many strategies that work. The question is, you have to find out. You have to know that it's going to work. That's really the big question. Right.
So, he also asked, do you have a method for cross validation using multiple paths?
No.
No. Okay. Anybody else? No. Okay. So we'll continue along. So we talked about recalibration. Now, going back to what I was asking about earlier, what are some of the more predictable position exit methodologies you believe in? One obviously is average true range. And would you apply the standard take profit or stop loss in any of those realms with average? Well,
I personally, in general, philosophically, I don't like to do anything anybody else does. I think it's always a mistake. So our strategies have always been, except for Ranger, which is kind of like, even the Ranger started out being sort of like a breakout strategy, but it has so many ways to change it that it's not. There are more ways to trade it, for example, than standard breakout stuff. But all the stuff we've used in Renaissance, for example, it's all proprietary. We made it all ourselves. I created it all, and actually the stuff that was in XT99 was actually made by me, by our software back in the early 90s. So I think there's lots and lots of ways. There's lots and lots of strategies there's lots and lots of ways to make money in the markets. And what really matters is that you find a way that you're comfortable with, that you find a way that you can afford to trade. and you find a way that's actually extensible, because you really don't want to be, it's very hard to make a living for a long period of time on one market. The more markets you can trade, the more likely you are to be profitable.
Okay. This is something similar to maybe Shalom. Are you a believer in fundamental, new sentiment, or even macroeconomic events as driver of assets that you watch in the markets?
Well, let's put it this way: yes and no. I think it's one of those kinds of things where, even if it's a fundamental event, you still have to test it. Because there used to be a thing called I think it was called a logic machine, and it would let you actually evaluate the performance of all kinds of things that we now consider to be quant ideas and so forth. So I think if you find something that actually really does work, I have a prospect right now I'm working with who's a very sharp, he's a quant trader. That's just what he does. He actually works, he makes observations of the market and then puts them into a strategy. So I think that's a viable sorts of action. I cover it in my book. It's kind of like doing it empirically. There's nothing, it's a perfectly fine idea. A lot of guys that I know who traded on the floor do that also. Guys who spread and so forth. So yeah, I think there's value in that, but you have to test it. Yeah. You can't just say offhand that they work, because some of them do and some of them don't.
Well, from your own experiences, would you have used it universally as a standard part of your trading right now, where if there is a new event, let's say a Fed call, that you can somehow predict the outcome of that and then trade off it?
I don't do that, but if you can, God bless you.
Nothing similar to that at all.
No, I don't use. I've been technical since the very beginning, and I have strategies coming out. I have hundreds of strategies, and I haven't even got any. I haven't got the ones. I only have a small hand. I have dozens and dozens and dozens in Renaissance, and dozens more to be added to it. And I have 5 or 6 times that multiple right on the second bench, ready for refinement. And once we get this faster, we're going to a faster program now, actually QuantStrat. And once we go to that thing, we're going to be able to accelerate our testing process by probably 100-fold. So it's going to be fun.
Right.
I'm not looking. I'm always looking for something new. But I know that I haven't even actually put everything that I know about trading into a strategy yet. So I guess before I die, I better do that.
Okay, I'm not sure if this is a decent question, but how many assets can you typically watch or add on a watch list in a standard, flat, or uneventful day? Like, how many assets would you have on your watch list at that point if it's uneventful, just mediocre?
We don't have a watch list.
Oh, you don't do a watch list.
We would basically, our strategies behave that way. But I think that's the whole point of algorithmic trading. There is no limit. The only limit is your computing power and your money. So there should be no limit to how many things you watch. You should watch everything you possibly can, because trust me, the people like Bridgewater and people like Renaissance Technologies and people like E. Shaw, they are looking at everything.
Yeah.
You can count on that.
So I guess I was going to ask, you're not using any form of a screening process where you'd watch an asset class and you just watch the fastest movers, top 10, 20 fastest movers?
Well, that's covered by our rebalancing.
Oh, I see. Okay.
And as we go faster, that process has to go faster.
Okay. Shalom came up with another question. Do you ever add to a losing position?
Nope.
Okay. Put it out there.
I think it's about the worst. I don't know why anybody thinks that's a good idea, but no, I don't.
Yeah. I don't know if this is a question you'll love or hate me for. This is a standard question you probably get. Are you pessimistic or optimistic when it comes to machine learning and pricing an asset? I didn't say machine learning, just pricing an asset.
Well, pricing an asset. I mean, who the hell prices assets?
Forecasting.
Forecasting. Let's put it this way. I ultimately believe that artificial intelligence has only begun to fight. So I think we're going to see all kinds of amazing. I think in 20 years, we're going to see probably things that will be absolutely amazing from artificial intelligence and from machine learning. I think I'm ultimately, at first I'm a humanist, but I'm a humanist that believes the technology is wonderful and we should use it, use it to benefit all of mankind. So and ultimately technology has been wonderful. Mostly it's done good things, and artificial intelligence technology, it will do wonderful things for us in all walks of life, including trading. So I'm optimistic.
Okay. Now, one of the big areas that I've seen where machine learning is very useful is for things like portfolio sizing, portfolio optimization. Would you agree with that?
I've never tried it, so I don't know.
Okay. And I was also going to ask about bid-ask spread, so I'm not sure about that either. Here's another standard question that a lot of people may or may not agree with. Do you believe in random walk theory?
No.
No. Okay.
Look at in all honesty, if random walk theory was actually valid, could anybody make any money in the markets?
True.
I mean, I think it's been long discredited. There's a very interesting book written. I think it's called The Prediction Machine, about a guy named Doyle Farmer. And he's one of the inventors of chaos math. And he did this back in the 90s. And he was actually funded by one of the really big trading firms here. And then I think they were bought by UBS down the last 5-10 years. And he's no longer with them. But he's a brilliant guy. And in the book, he pointed out that, and their job was to use artificial intelligence, neural nets, genetic algorithms, and all that kind of stuff that was available in the 90s to predict market movements. And what he found was, and I've always thought this quote was incredibly telling, he said that overall, the markets really aren't, I guess he would probably say, he wouldn't probably even say this, but he said was that there are periods and pockets of predictability. And that's what they jumped on. And in reality, that's what people, if you really look at what really happens when you make money in a market, that's what you've done. You've jumped on a non-random, predictable movement.
Yeah, it's pretty hard. But here, leading into this, I know this may be a different kind of question for you. Have you ever come across models that are designed in a way where there are no parameters? These are the examples picked up on Reddit. One quote was, if the price has reached a new all-time high, it is an uptrend and by ever possible measure. Does that make sense?
Well, I asked the question, what if the market hits an all-time new high and then tanks? I think that I personally have never worked with models that don't have parameters, because I always work with technical models, and by definition, they're going to have parameters. And I know people basically avoid parameters because they think optimization is poison, which is one reason why I use walk forward analysis, because I think optimization can be a fool's game. So I think with walk forward analysis, you don't have that problem. You can fool yourself still a little bit, but it's much harder. So no, I have not. And if somebody's got one, that's great. But in all honesty, we talked before about these kinds of ideas that based upon empirical observation. In the same kind of way, when I started quantifying patterns, you could say, well, a higher valley around a lower valley, two higher valleys around a lower valley is a pattern. Yeah, well, it is, but if you systematize it, you're going to find that it's a pretty useless pattern. It's not really a head and shoulders or a reverse head and shoulders. So I think in the same kind of way, once you come up with these observations, you probably have to. It would be, if it were me, what I would do is I would actually put it into a quantifiable formula, so I could test it, and then see if there aren't parameters that make a difference. Because I think in general, what I've observed is you probably will find that there are.
Okay. If anybody else got any questions, let me know. One from Shalom again is, how many exit conditions do you have in a typical trade?
It depends. Some have one, some have two or three.
Okay.
Some are more complex and they have more. It just depends on the strategy.
I'm not sure if have or divulged to be able to answer this, but if you are, among all your trades on average, what is a mix of longing versus shorting?
To be honest with you, I saw that question. I have no idea.
Okay.
I don't know. I don't really, it only matters because I think in general, you're going to find, for example, that a lot of strategies in a very, very bullish market like we've had in the stock market, they haven't made much money on the short side.
Right.
And that's great as long as the market keeps on going up, but like it hasn't. So all of a sudden now you have a different situation. So I don't really know. But in general, in a lot of the markets that we trade, there's a lot of motion up and down. So it probably winds up over the long haul being a relatively even mix.
Okay. Another question is, how many strategies, algos would you say you have in your arsenal? I think you said probably in the upwards of the hundreds.
Yes. I mean, there are many dozens in Renaissance now. We're adding a whole new wing, shall we say, which will have many dozens. And there are many more sectors in the wings waiting to be run to production.
Okay. Here's an interesting one. How many strategies would you say can be traded at all time profitably, regardless of the market regime?
In all honesty, I don't know. Maybe none of them. I don't know.
Okay.
That's the thing. We're willing to change because it really gets to be a question of profitable over what time period.
Right.
Profitable over the last 3 days, last 2 months, last 3 years. That really is the question.
Okay.
So you have to really all the ones we trade have been they wouldn't get into the portfolio unless they were profitable. But the question is, we want the ones that are really kicking butt right now.
Right. Okay. We got 2 more questions on my list. If anyone else got any questions, please type away. Would you say, is it easier or harder to raise capital for a system or a fund these days? And are you finding investors, capital allocators to be more jaded, skeptical than they were in the 80s and 90s?
Oh, there's no comparison. It's way more difficult, even for someone like me. So yeah, it's difficult. And part of it is a lot of the allocators are, New York based, and a lot of those guys are jaded is a good word. So yeah, and they're very stock centric. So even though they ignore that, they don't like you to know that a lot of the hedge funds have actually added managed futures as their biggest, as they added as a sector to their portfolio. So they don't break it out as managed futures or that kind of thing, or global macro. But yeah, it's more difficult. And in the 80s or the 90s, if you could make money and you could have a 30 or 40% drawdown, and nobody even cared.
Right.
There hardly anybody. There was really there was not much competition at all. How many? There are thousands of hedge funds now, and the reality of it is that most allocators really they follow the herd mentality. So most allocators start out with you start out talking to somebody who's actually kind of a low level guy, and his job kind of depends on whether or not you make money or don't make money. So if you really blow up, if he goes out on a limb and recommends you urgently and you blow up, then he's out of a job. Yeah. So there's a real risk aversion to taking a risk, and it's not an accident, for example, that most hedge funds are correlated, because they pretty much all do the same thing. They get killed when the stock market goes down, and they make money when the stock market goes up. And yes, it's way more difficult now than it ever was. It's way more difficult. You'd be better off. It's easier to raise money overseas than it is to raise money in the States, unless you have a pedigree.
Okay. Would you say also competition is a big problem with it as well?
There's way more competition, and I don't really know. I don't really pay much. Maybe I should, but I don't pay much attention to the competition. I'm really mostly concerned about doing extremely well myself. So I don't really pay much attention to what the competition's doing, but there is a lot more of it. That's for sure.
Okay. Well, I don't know if I think you've kind of answered this, but if you want to take another attack from a different angle, when was the easiest time period to allocate and why?
mean to get an allocation or
Yeah, to get capital allocated to your firm.
Well, I think that it was obviously probably the very easiest time was in the 90s. And that's partially because people began to perceive that there was the trading systematically had legs, it worked, and the markets were moving, and you could make a lot of money in futures. And so I think that probably was the single easiest time. Ironically, one of the best times to raise money for a person involved with futures is when the stock market takes it down. Because everybody, it's like anything else. I mean, when people are making money, they think they're geniuses, and they don't need any help. And when people are losing money, they're panicked, and they really are looking for any kind of help they can get, which is understandable. But you should be a little more prudent. I think that's all.
Okay. I'm on my last question here. You'll probably get a good laugh out of this. What is your honest opinion of the so-called trading gurus you find on YouTube and Facebook these days?
I would say that they should. It's like anything. You want to just see what their track record is.
Right, which a lot of them don't have.
Because if you don't know what their track record is, you can't. They could be the nicest guy in the world. They could be very well intentioned, but if they don't know what they're doing, it doesn't matter.
Yeah.
So the track record is what matters.
Yeah, that's what 2019 is all about for me. Now, here's a question from Art. If you could go back in time to when you first started trading, what would be the most important thing you tell yourself to be successful? I love that question.
I think the most important thing to be successful is to be really honest with yourself.
Okay.
I think in truth, if you can't, making a living as a trader is not for everybody. And really, the truth of the matter is it's not hardly for anybody at all. Actually, it can be a very difficult game. But making money as an algorithmic trader, really, you think it should be easier, and it is easier in the sense that when you're trading with discretion, and you're really having a bad run of it, you're thinking all the fears, all the worries, all the feelings of inadequacy come up. You question yourself constantly, and it doesn't work. You can't be questioning every trade and make money. When you're systematic, it's a little bit easier because you're really questioning. The question really gets to be: is the system gone? Is it gone off the rails and for good, temporarily, or forever, or is it still something I should stick with? So I think honesty is critical. Integrity is critical. You have to be unbelievably thorough, and don't trust. I mean, I think I have it someplace. I still have a stock that I worked for. I was a broker, and there's a guy in my office who actually did stocks, and he said, this is a great stock. We've all heard that story, right? So I bought it. I bought it at around $1.50. It ran up to around 11. I had a target of 13, so I wasn't going to sell it till it hit 13. Well, the story. The story goes where not only did it not hit 13, but it became worthless. So the question of taking, I don't take anybody's advice about the markets unless I know they really know what they're talking about, and so you really have to. And that's pretty important. You have to be very self-reliant.
Yeah, I'm from Canada. We have these stocks called Nortel, RIN, all these others. So we're used to having these big companies go away very quickly. So we're used to that, especially in the technical field as well. I'm not sure if that might be it. If you guys got any questions, type them up. Just a curiosity, is there anything you also like to put out there?
Well, one of the things, we do provide, I do consulting, and we sell a program called Ranger, which is very powerful and really pretty unique. It comes with strategies that actually are proven, developed by us. We're actually going to be putting them into our program. And it comes with a complete tutorial, which shows you how to make your own strategies. So that's one avenue people can explore. I do consulting of almost any sort, anywhere.
They can reach you at pardocapital.com.
Well, the best way to reach me is bob.pardo@pardocapital.com.
Yeah, I mean, to put your own email out there and people can reach out to you, that's pretty impressive. Not a lot of people do that. So,
and also it's better to reach out to me by email first, and we'll set up a call. On my phone number is 847-922-0248. But I really prefer to pre-schedule calls because it makes more sense for me.
You're an extremely busy guy, I know.
Sure.
Anybody else got any questions? If you want to type them up. Anything else you'd like to add at all that maybe we've missed here?
Well, I mean, obviously, I really like what it is that I do. I've loved it from the very beginning, and I don't love it any less now than I did then. I think the whole question really gets to be when you're doing this kind of trading of any sort, is you constantly need to be improving.
Yeah.
And if you're not constantly evaluating what it is you're doing and constantly looking to get better, you're probably going to become a dinosaur.
Yeah, pretty fast. Well, especially in this world. Well, the thing is that now, I mean, I've been humming and hum on the cryptocurrency world. And just by luck, I found this, as you know, you probably read in my strategy or my emails, these crazy daily returns with cryptocurrencies. I mean, what's your view right now of cryptos? I mean, do you see a lot of potential with them? A lot of the
I think there's huge potential. I mean, I kind of wish that I had gotten more involved a while ago. I mean, my doctor, I'm not really a person that goes to a doctor, but this guy that I've gone to, actually he made $500,000 in crypto.
Yeah. Oddly enough, we had another doctor not long ago when that meltdown happened. He was up about 150 grand. So
I think I know for a fact that a lot of the prop trading firms here are really heavily involved with crypto. So yeah. I think the opportunity is huge now. They're very inefficient markets, and I think the opportunity is going to be big for years to come.
Are you finding that you're getting a lot of people interested in the world of crypto? Because that's what I'm hearing in a lot of institutions is they don't want to do crypto, but the customers want them to do crypto, so they have to do crypto, and they put together this pet project team to make everybody all happy.
Well, I think I'm not really getting. I have an associate from years ago who got involved with crypto, so he's the only person I really talk to about crypto. My son's actually involved with crypto. And he's having a good time with it. But I think the biggest problem with crypto is the data. I mean, people, and for most people, it's a very abstract, obscure world. And getting your teeth, getting into it is challenging all by itself. Yeah. And now they're 2,000 cryptos.
Something like that. But
so,
out of that batch,
that gets to be a big question all by itself. So
But the funny thing is, since this discovery, we'll call it, in the last month, there's only about 15 crypto pairs that I'm finding that work perfectly with. It's kind of like a scalping thing, and it works awesome. And like I don't know if you've been reading the winning ratios we've been getting, are just impossible. You think wouldn't be possible, but they're there, and we've verified it many times over. A question from Art asked, is Ranger an indicator?
No, Ranger's a trading strategy, the development. It's an uber flexible trading strategy, which can create hundreds of different trading strategies. And it has proprietary indicators that I've developed in it, actually.
Okay. So the question is, do you have a link for it?
No, send me an email and I'll send you the information. We're putting up a new website for all this stuff in the next week or two, but it's not up yet. So the best information is just send me an email and I'll send it to you.
You want to repeat your email again?
bob.pardo@pardocapital.com.
There you go. Any other questions? Miggy came in. He asked a question. Could you describe the process for discovering and deploying a new strategy? That's pretty.
Well, basically, I mean, I don't want to sound like a guy who's got all this stuff coming around. But I really haven't had to come up with a new strategy for a while. But one of the things, and I have so many of them, as I said, on the bench, that I'm not really looking for new ones. But once you get a basic idea, the process is really relatively simple. You have an idea, you got to put it in some kind of coded form, You have to, and you have to make sure it's coded up correctly. Then you have to test it and do preliminary testing, and then see if it passes that. Then you have to take it into deeper testing. And one of the things I forgot to mention, I have a course called Building Robust Trading Strategies, which actually teaches people how to do this. So but essentially you get the idea, you code it up, and you do a first round of testing, second round of testing, and then if it passes that, you do a third round, and if it gets through there, then you basically go on to the next market. That's what we do. We just basically run every strategy we have in every market we're interested in.
Yeah, I know. Are you familiar with Dr. Ernie Chan at all?
I don't know him.
I know him. Yeah, no, he's. I mean, everybody does the same process, exactly what you nailed out there. So that's pretty standard.
Yeah, unless you could do it, unless you're unless you're clairvoyant.
Well, where computers are going these days, how it goes.
You're sure.
They'll have the answer before you ask the question, as I always say. Yes. Anybody else got any questions at all? No. And I'm going to put a reminder. You're welcome to be part of this, Bob. We're doing our second tutorial tonight in 2 hours at 7 p.m. My time, Eastern Standard, for our Python course. So I'll put out if you just email me, and I'll get you that out for you tonight. Okay. It's a second session for tonight if you want. Anybody else got any questions? Oh, thanks so much, Bob, Brian. Great information. Anybody else? Questions, comments? Anything? Maybe no. If you want, we got a 30-second delay with YouTube, so I'll have to give it about 30 seconds.
Sure.
So I've got 5 o'clock right now. We can wait till 5:01 my time, so we'll give it a minute.
One thing also, if people come up with questions after the fact, they can send an email to you or to me.
Yeah.
I'm not going to spend a half an hour answering a question if it's really a complicated question, but I'll certainly be happy to do my best to answer some questions.
Okay. If anybody wants to send me a bunch of questions, and we could do this in a couple of months again if you want to do another round of this, or it's up to you, your time, if you have the time.
Yeah, I always enjoy it.
Yeah, this is good. Really appreciate your setting out the time for it. This is awesome of you.
Sure.
Anybody else coming up? Still 5 o'clock, 5:01, blah, blah, blah. Nobody has a question. Anything? Anybody? This will do quite well, hopefully, on YouTube. This is an awesome session. I really appreciate it.
Oh, great.
I'm hoping this will be
open. Will it be on YouTube now?
It's on YouTube right now. It takes about the length, maybe 10, 15 minutes to render, and then it gets deployed into the regular stream of YouTube. So
I've seen myself on YouTube before. It'll be interesting.
Oh yeah,
I've seen myself on YouTube. So
yeah. I mean, I did some searching, and I did. Is it with Chat with Traders you did, or another?
Well, I've done a couple of podcasts, but I just did one. I'm doing. I did one with Andrew Swanscott.
I think that is Chat with Traders.
Yeah,
I know it's an Andrew.
I don't know if he's Chat with Traders, and I did with Adrian Reed. And then I did one with Jacek Lempert just recently. And my first one was actually with Michael Koval, a trend follower.
Yeah, that one. Are you familiar with 52 Traders?
With which?
52 Traders.
No.
I did one with them. They're kind of out of Australia as well.
Okay.
I've done one with him. That's pretty well all I've done.
Okay.
So again, Art says, excellent. We'll have many questions soon. I'm at 5:02. We'll call it a night.
Okay. Well, thank you.
I appreciate it, sir. This is awesome.
Good luck, guys.
Thank you.
And ladies as well.
What's that?
Good luck, gentlemen and ladies.
Yeah, exactly.
And lady traders out there, hopefully. So
may you have a good and highly profitable 2019, as they say.
Extraordinary. Excellent.
No, hope so. All right. So I'll end the meeting, and thanks again for doing this. This is awesome.
My pleasure. Thank you.
Thank you, and have a good day, guys. Talk to you later. Bye.
Bye.